Hey guys, how are you? This is Ishay Breslower, your host of the CRE SharkEye Show. And today we have a special because it's a mutual show. It's not only a CRE SharkEye Show, it's also together with GPARENCY, a new company that we'll hear all about it. Ira Zlotowitz is the leader of that company. And we have actually an industry leader with us. And that's a big honor because we're going to hear all about financing in depth and the way to do it. And the new, I would say, Netflix for financing is coming and coming strong. Ira, thank you so much for being with us.
Thank you very much for having me, Ishay. Thank you.
My pleasure. You know what? Before we dig into your story, which is one of the fascinating ones, tell us give us a 2-minute elevator pitch. What is GPARENCY? What are you guys all about?
So GPARENCY that is a company opened up to provide equitable access. The passion is, how can I help people? Many people want to get involved in commercial real estate and they feel like I need an edge up. Who's going to help me? Who can I talk to? And even you have many real estate tycoons. They're in real estate. They don't realize things keep changing and they're getting ripped off in certain areas. There's data available for them in different areas. So we opened up a company called GPARENCY. It provides equitable access for opportunities for commercial real estate owners everywhere. And the signature product we're starting with is on the debt side, is that for $16,000, fixed $16,000, we will close your mortgage. I don't care the size, I don't care the complexity, does not make a difference. For $16,000, and that comes with membership. We're a membership service. Think Costco, think Amazon, think Netflix, think we're a membership service. You get membership for the next year. And during that year, if you want, you get 3 main things. One, every future deal that you want to broker is only $11,000. But more importantly, if you don't think you need a broker on every future deal, you think you can do it yourself already, we'll teach you, we'll give you introductions, we'll give you data. No additional fee to do a deal yourself. And number 3, we're going to provide a concierge that will help you, give you updated information on acquisitions, listing prices. We're not listing brokers. We're going to go to the listing brokers, update the information that the market has, and show it back to our members. $16,000, close a mortgage.
So that created material for actually 2 hours of a show, which is incredible. And I'm very, very curious already. But you know, before we get into this whole thing of GPARENCY, which is obviously a revolution, tell us a little bit about yourself, how you started, because I know that you've been Eastern Union, one of the co-founders of Eastern Union, who became obviously one of the largest financiers in the East Coast for sure. I don't know elsewhere, but it's one of the largest industry leaders. Tell us about that, about yourself, how you started with this whole thing. Obviously, there's a very exciting history over there.
So how I started GPARENCY?
No, I would go back, Eastern Union, all the way to the early days. Give us some inspiration, as we call it.
Got it. So prior to Eastern Union, I've only done one thing my whole life. I'm fortunate enough that I'm doing only one thing, commercial real estate finance, helping people, providing equitable access. For many years was training people straight out of school, straight out of yeshiva, straight out of college to be able to become successful. No background, no education, nothing. I had the merit to train. Someone just did a recent calculation that the team that I trained over my whole career have just brokered the $1 trillion mark. So $1 trillion mark of transactions, wherever they are today, we accomplished those types of numbers. So I'm fortunate for that. But I started the finance business, and to me, it's very important transparency. And if you're doing business and you're a trusted advisor, to be a trusted advisor, you have to provide full transparency. So I started out at a company. Thank God I was successful, hit the ground running. I was 21 years old. And about 3.5 years in, roughly, the company was bought out by a bank, a large percent. And the shift, instead of the client's best interest, it was first try to bring business to the bank. And then if you can't, shop it elsewhere. And you're getting paid by the client, by the GP, the commercial real estate owner, and it was bothering me. And I left that company, and I opened up Eastern Union with the goal, the same thing, trusted advisor, but very clear. We rep the GP, and that's me, the business. And I was fortunate enough, the grace of God, a partner in the business, Abe Bergman, who when I stepped down, he's running the company today. We built the company to the 3rd most active commercial mortgage brokerage firm in America. In 2019 was the pinnacle year. Then COVID came and went back up. They had back up from that point, but that was like the dream year. We broke $5 billion in transactions, debt, equity consulting, you name it, the company did it. But under the hood throughout, I always had this inside me that the market is going to change. Technology and data is going to change and play a role in commercial real estate, like in every other segment. Every other industry is placed. There's many reasons why it took long to get into commercial real estate, but I was always planning for both. And it made it confusing sometimes. If you ask people who worked for me, they could say, yeah, maybe he's a visionary, but during that time was a tough time because I wanted throughout the last probably 8 years and 9 years, I was was running two companies, the tech data side of a company and the brokerage side, and I had to balance both at the same exact time. And we were building for it because I always said to myself, I will never be Netflix at my own business. And I meant by that if Netflix was going to come into my space, it was going to be me. My dad, in blessed memory, always point out how you watch how, IBM is no longer the big IBM. You look at Compilot, look at BlackBerry, look at Apple. I think Tesla's phone is going to take down Apple. Seeing the war right now in Ukraine, right? He provided them internet from the sky, so that the whole world is going to change. You see in our own, look at Netflix, the Blockbuster. And the same thing is going to happen here. And I said, I don't want to be on the outside of it. So I was always prepping Eastern, wearing both hats. And when the market was going to shift, make that shift. The turning point for me that I realized, you got to speed this up, and something's broken in the system for me, is that in 2019, like I said, was the best year. $5 billion. At that point, I had the dream team. Everyone was homegrown. I was known we were known as Eastern in the industry as the greatest team, greatest company. That year, there were thousands of transactions. We closed $5 billion in every type of transaction you can name it. And the fee was approximately $40 million. So the gross revenue to the company is $40 million. And of that $40 million, how it was spent was really disproportionate. So there's many issues about why the fees, you want to go into later, I'll say what didn't make sense on the client side. But internally, something's wrong. 25 of the 40 was paid out to the originators. That means if I didn't do any deals, I didn't get a share in the 25. If the deals, I shared in the 25 with all the other brokers in the company.
Right.
Only 15 million went to cover the business. So when someone says, whoa, Eastern closed the deal, who ran it? The staff that did the heavy lift on the deal was all compromised at $15 million. So 25 went out to the broker, brought it in, and bigger picture, and that's what happened. At that point, if you looked at a commercial real estate business, a brokerage business, how much is that worth? Now, first of all, you have to realize what type of business I give over to my son. If you don't like my son's personality compared to mine, or you have something different, or my daughter, it's not the same. It's a relationship business. So that industry is about me. So you can't go over this business, number one. Number two is, what is it worth? 2x, 1.5x. And if I did buy, I would say, Ira, you're an elevator asset. Sign a contract and you stick around for 5 years. Get all your brokers. You know what it will cost to get each broker to sign those contracts? So I said, my best year built up. There's certain liabilities you have, and something's wrong. And that was the beginning of the turning point. And ultimately, I looked back and said, what would happen if the business converted to membership? I worked on deals for over 8,500 unique clients in the last 3 to 5 years prior to that point. I said, if I worked on 8,500 deals, I got 8,000 clients to pay $5,000 a year. That's the same 40 million. But a recurring revenue model, forget about the technology. Forget about a marketplace. That's worth 15, 20, 30x. So a business of 40 million revenue worth 800 million, 600 million, $1 billion plus, and it could grow. And under the hood now, think, hey, the money gets spent. I could go out there and take the $40 million and hire the best in each segment and really spread out that now, oh, and the market's doing good, we have good staff. And now we have to get rid of staff consistently and then grow the business from there. That was the beginning of the turning point that happened. The trigger was that a competitor in the space was raised that venture capital money. I got a phone call from the VCs, one of the VCs that weren't invited into that deal. They made me an offer. And thank God, I go into details if you want, but the long and short is that, I turned around and they said you can invite some clients in, and the response was overwhelming. We oversubscribed to 150 most influential commercial real estate owners, developers, lenders, attorneys, competitors, even employees, and industry leaders invested, oversubscribed to 15 million, largest seed round, according to one of the companies that interviewed us, said it was the largest seed round for commercial real estate. And thank God we're a little over 100 days in, and things are doing beyond what I expected. All the grace of God. We just do our thing, and God graces back. So that's the 2-minute recap.
You know what? First of all, it's incredible, and it takes a lot, to realize all of a sudden that the market is shifting, and you have to move from one one type of a business in order to get to a different type of a business, especially when you're talking about tech and talking about financing, and everybody got used to a certain thing, and you're talking about really changing a mindset and also educating the market. Can you talk a little bit about that, the education curve, that I would say the process of educating the clients? Can you talk about this a little bit?
Yeah, so I just want to touch on the change. What's interesting is that everybody knew there's a change coming. When I made a certain move, in the beginning of 2020, and, then people read it that several brokers left the company. On their way out, they said, Ira, I agree the market's going to change. But their quote was, let's milk it. One of the people said, let's milk it for the next couple of years if the industry's paying a certain way. They weren't doing anything wrong, but the market's doing. And I said, but what are you doing 2 years from now? What are you doing 3 years from that point? They said, yeah, we'll deal with it in 2 years. I said, I have a company responsible of 100 people. We can't just wing it 2 years from now. So what really is not so much of an education. We thought there was going into it. My gut told me is that, for the 25 years, I'll give you a great story. This person's working in a pizza shop, and they tell the owner, I understand people can't clean up the tables. What's wrong with that? The owner says, if they cleaned up the tables, you wouldn't have a job. We make money from the inefficiencies of the market. That's why everyone makes money off the inefficiencies of the market. And what somebody's telling me in my gut is that in the beginning, people didn't even know which banks to go to, how to get to lenders. So, okay, it made sense to use mortgage brokers. But when I used to hire mortgage brokers for all 25 years, I used to tell the same thing. Logically, it doesn't make sense. Leaving aside the politics of Donald Trump, he went on to become the president of the United States. Half the world loves him, half the world hates him. Do you think he needs a mortgage broker? No. But yet, I had the merit to train someone in my early years that closed the deal for Donald Trump and built a business, made an introduction to Jared, to Ivanka. Did it make sense you need a broker? Did it make sense? I tell people it's a numbers game. There's a new lender comes in, someone doesn't know about the lender. Come to the table, you're bound to do a loan of some sort. Today, my line is everybody should use GPARENCY. If you don't use GPARENCY, something's wrong with you. It's the first time pendulum switch. But people said I agree. Hence, 150 investors oversubscribed and more people wanted to come in. But it takes time to change mindset. I said, okay, fine. So I made a decision when I went into this business that I'm not running it Ira Zlotowitz way. I'm going to surround myself with even a better team, all focused on the same plan. They'll have shares in the company. Everyone has shares in the company. I'm going to make every decision by committee. And every decision so far has been made by the group based on feedback. And we made a decision, I'm going public. If I don't go public, it's for one reason. God decided, like I call it the Titanic syndrome. When you say it can't fail, that's when it fails. That's what gets me nervous, is that at the end of the day, it's too good to be true. So I went into this, and I didn't want to raise 15 million. I wanted to raise less because I believed sales could take up early. They said, no, go very slow. Count on 1 to 2 sales in the beginning. Grow by 50% to 3, and then 4. Thank God had different plans. In the first few months, as I gave in the webinar, it went from 3 to 12 to 24. We're recording this at the beginning of March, already 9 contracts in. I'm paced to grow again by 50%, but now 50%, not 2, of 24. And things seem, thank God, at a whole level. So the education process really wasn't an issue. It was the fear of people saying that there's an education process. How many clients called me up at a left field and said, finally, someone is willing to admit that I could do it myself, and they just need this information. I could buy that information. I could just buy the time that I need from the service to get things done. And yeah, who's complaining, who's arguing about certain points, who's saying it? It's most of the doubts being raised by competing brokers, because psychologically you're going to say, someone paid $300,000, you're going to do it for $16,000? Let me tell you 2 things. Number one is, who said you should have been at $300,000 to start with? You could have done it yourself. Why 80% don't use brokers? So why is your starting point 300 to 16? Why isn't nothing? I'm overcharging at 16. Number one side of it. Number two is, like I said over the story, I was fortunate during COVID to be able to broker, leverage the relationships we have to broker and mobilize for PPP loans. Over 20,000, I don't remember the exact number, PPP loans we brokered. Now remember this, someone gave us a deal. The loan is in the tens of thousands the loan. The commission barely paid for my breakfast. But their whole business was onto that loan. And they called me up and they said, Ira, I have an issue. They called the head of the department. I remember the department said, well, Ira, what are you wasting your time on a stupid little loan? You're doing thousands of loans. Is it the favor you're calling me for? I said, but this person, their life depends on it. So if you really realize about a broker, if you have a broker that you trust and you love, they're going to work for you whether you have a small deal or a big deal. That broker closed a $300,000, ask them, what's the smallest deal you did in the last 2 years? They take pride. I work just as hard for $1 million loan, really, but you work just as hard for 10,000. So then why are you charging me 300,000? A lot of things don't. So the 16,000, I'll go into math if you want to do. It's very profitable, 16,000. But more importantly, we're building the technology. You should do it totally yourself, and that's the play of the time.
You know what it reminds me? It reminds me the famous interview that Jeff Bezos had at the time. And there, in 1990s, I think it was, that they asked him, what is your main thing? And he was like constantly saying the obsession on the client, the obsession on the client. It sounds like that's exactly what you're doing, because you're saying, I'm looking for what the client needs and I'm obsessing about the client. Can you talk about that a little bit?
Yeah, so to coin that was coined by us. That's the same plan, and one of the things when I took on my co-founder, Ben Schweitzer, who runs Freddie Mac, ran technology at Freddie Mac, and we're building a marketplace. So you take an analogy to Amazon, right? There's all sides to a marketplace. And now a marketplace, there's GPs, general partners, commercial real estate owners on one side. The other side of the marketplace are lenders, equity funds, can be listing brokers. That's ultimately the marketplace is going to work. Our obsession is on the GP. The GP, you want to break into real estate, feel at home by us. So people say, where's that line in the sand? We're having lenders who want to be on the platform, willing to pay us. And someone said, hey, why don't you only put lenders that pay you? Because it's not interested. It's not in the best interest of the GP. What happens if the best bank in the country doesn't want to pay us? So we're not going to show them deals. It's not in the best interest of the GP. We are the best interest of the GP. We're not taking back-end fees. We're not upselling, nothing. GP is the obsession. We're never going to let people rate their experience with the GP because potentially come a negative to the GP. Our obsession is the GP. My business plan is to be able to go, there's 1 million plus GPs in America. Let's get a whole million. People say, I can't get a whole 100% market share. I said, listen, it's not like this competition. It's like Hulu and Netflix. You can have Hulu and Netflix. It's not an issue. I'm charging you $5,000 for a membership for the year. That's it. To give you access and knowledge and everything we have. You want to also go to your broker? No problem. No issue. It's not like all or none. You buy life insurance, who are you buying it from? Do a mortgage, who are you doing it from? All or none. It's not all or none. It's either way. It's a membership. That's how it works.
Tell me something. You have obviously those two sides. You have the client or the GPs, the sponsors, the owners, the developers, call them whatever you want. Then you have the other side. You have the lenders, right? You have those financiers. Can you tell us a little bit about, first of all, the challenge of obviously getting everybody aboard, meaning on board, and how does it work today in terms of the process? A person comes into your system. I know I'm piling up a little bit, many questions at once, but the curiosity is just creeps in. So you're talking about the lenders on one side, GPs on the other side, and then you have the process, getting them on board, getting those guys on board, and then having the process. So can you tell us a little bit about how the process works today? And then we're going to start talking about where your vision goes.
So right now, don't think of technology. We're humans. We're regular brokers today, but priced with a membership model today. Building out the technology in the marketplace over time. But really, if you think about it, my whole career is a marketplace. I have a relationship with lenders, I have a relationship with GPs. And the reason why the name of the company is GPARENCY is a blend of GP, the general partner, and transparency coming together. That's what it really is. So instead of all these words, syndicator, GP, owner, client, GP, let's standardize the terminology as we go forward. So it's GP on the lender side. We always had it. Now what's happening is we're telling to a lender that if you would want to get better access to exposure to meet clients directly, you want better information, you want better things that I can offer, nothing to do with if you're not the right lender, you're not getting the deal. That's where they're joining the platform for. So we have right now 3,000 lenders on the platform. Now, on the platform, we actually published on our website, my whole manifest, gparency.com/manifest. All my lenders and equity funds are published there. Anyone can go. No, you don't have to log in. Just type in the name of the bank. You heard that Customers Bank lends on something. Type Customers Bank. I'll show you all the loan officers at Customers Bank. Sometime, end of April, this is where it's going to really change the industry without data and technology. Take transparency to the next level. Every lender that became a partner with us in our mission, the lenders are joining really not just for this better exposure. It's because they believe in the mission of equitable access. They know that people are being blocked out. They know that some small person wants to break in. A senior broker is not taking the time and effort for that new broker, new client, new GP. They know that's happening. They want to be able to let me build this out so there's real transparency in the industry. They want to standardize the industry. Why the documentation all that way it is. So you're going to be able to go onto this platform, onto Manifest, starting the end of April. Let's say you don't even know which bank to go to. All you know is you have an office building in Texas. You'll be able to go office building, Texas, and we'll show you all the lenders that will lend in office building, Texas. Now, let's say we have 22 such lenders based on all human algorithms, technology, whatever you have behind the scenes. The three that are partners will show up their information and which loan officer to call and what the lending profile is. You can read it first. You don't waste your time sending to the wrong lender, because that's the worst thing you could do is bother a lender with something they can't even get done. And then I'll say there's 19 left. If you're a member, through the concierge, you'll have access to the other 19. So the public will know there's 22 lenders lending on this building. Which three are partners with us? We'll show you them and their information. This is going to be without logging in. No login, no firewall. Imagine what you're going to get when you put the firewall in the beginning. So the whole approach is that start the industry before. My main message is when do you have people taking advantage the most? When you're nervous, you're scared, something breaks in the house, someone says, okay, whatever your cost, come down right now. You realize you could have just flipped the switch, it would have been fine. You regret how much you promised the person. Same thing here. Before you do anything crazy, come here. Let's see what's available for free. If you're a member, I'll even give you more information. I'll make an introduction to the lender. You don't have to pay the broker. Why are you paying? Not every deal requires that broker. So all these pieces of the education process, it's very simple. It's the same old business to start, but it's priced as a subscription and it's a marketplace. The technology, well, wow, it is that all this was supposed to happen in a year when technology was first. Well, the grace of God, we're able to start it today and signing up people, clients, GPs aggressively that are saying is, I want this business. And many are calling us up, which I never had in my life, inbound calls saying, Ira, I love it. I have a deal now. Or, Ira, I love it. I don't have a deal now, but I'm telling. So I said, why do you call? I just had to tell you that finally someone's tackling and following what I believe. That's the same passion the investors gave to me. Why did they invest? It wasn't like this business. When I called up the investor, you know what my conversation was? I said, can you imagine if I gave you a map of the United States? Every owner will get a map of the United States. What's for sale with updated pricing points? They could upload their rent rolls for themselves to see. They could keep the due diligence in every note. They could see public available data. And I'm only charging them, and then which bank is hot, which listing brokers are hot in that area, what they could expect. And they pay $5,000 a year. I said, what percent of owners would do this? I said, what percent of owners? I said, I don't know, 75%. I said, 75%? I said, if I got 10% of the million, that's $500 million in revenue in a recurring revenue business model. Forget about how many lenders will join. Forget how many equity funds will join. Forget the other side will join. So there's a product where people say, you're talking about to everybody. People's going to copy it. It's like, people are going to copy no matter what you do. I said, and I got this from my dad when he opened his business. He told me, when you open up a product, create a product, create the best damn product. I didn't use that word. Create the best product that you could create. No issue. Don't do anything you could do better. Do the best. And then what's the cheapest, most efficient price you could charge? So if somebody's coming in, it's because they're doing something that you know they can't survive because they can't be better, can't be cheaper. That's why we bought this to start. But like I said before, the added beauty is this is a type of product you could subscribe here for $5,000. Think about your multi-billion-dollar real estate owner. You're someone that has a payroll or someone small, it's $5,000. At that number, if there is another competitor that charges less or more, go to the Mosa. I'm not looking to take anybody out. I'm looking to provide the first mile. In retail, it's about the last mile. How do you get it from your house? That's the whole thing in retail, online retail. How do you get from the warehouse to your front door? Over here, it's the opposite. I'm breaking it. How do I get a deal? Where do I find who's a lender to go? Let me start with that. And then once you want to go yourself. You need help? I'll tell you where to go. You want someone in my shop, a human to actually help you? No problem. Pay for those pieces. But $16,000 is the most you'll pay to entry, the most. And that $16,000 is really broken out into cheaper bite-sized pieces. $5,000 is the membership, $4,000 is underwrite and shop the deal, and $7,000 is run the deal to close. So someone could really say, I just want the membership. I just want membership and shop the deal. Because once I get the right quote and meet the banker, I'll take it myself. No problem. It's great. I only pay $9,000. I don't pay $16,000. So that's the business. That's what a success is. There's no like fine for what's the catch? There's no catch. You just didn't realize how much you were paying, like the stock brokerage business. Then they used to charge per trade. Oh, it can't be again the same thing. Why? Who says?
Let me ask you this. You know what? Before I lead to the next question, I just want to break it down to see if I understand, if the listeners also understand. So first of all, we're talking about a business that instead of using brokers and getting a brokerage fee, a commission for the broker, for example, you're paying a straightforward fee upfront that is $16,000, obviously with all the services that Ira just mentioned. etc. And you're getting all those services. Now, the Today Shop, if I understand correctly, again, correct me if I'm wrong, the Today Shop is basically consists of the concierge services of a human being that sits, obviously, and talks to the general partner, to the person who is actually doing the deal. And that person is going to help him structure every single step of the way and help him get through it until he gets, obviously, the financing and help him close the deal. Okay, so that's, if I understand correct, this is what today is going on. Now, the vision, obviously, is that the whole technology aspect kicks in, is where the person obviously gets into your site or has the membership and gets into your site, and whether they're logged in, members, not members, obviously the different levels of free or not free or paid, et cetera, different levels, and they're getting in and they see all the information in front of them. They want to go for office, multifamily, whatever, in this area, this location, that state, and they see who are those lenders and what are the possibilities for them, and they can go to that. So far, am I correct?
So you're correct, but the time zones are off. Today,
yes,
those are the options today, and they're never going to change. The difference from today and a year is that now all communication is only via a human. In a year from now, you could choose all through human, all through the technology, or a hybrid. So today, and to break it down, is that the 16,000 is really 5,000 membership and 11,000 for the whole deal. So someone today has a choice to say, Ira, I could do a deal myself. Just tell me, who are the hot lenders? Can you make an email introduction for me? No, just be a member for that. And I'll do that for free every future deal. So 5,000 for the next year. Someone says, no, but this deal I'm a little nervous about. I want a broker to run it. No problem. It's up to 11,000 more. You can either do it in bite-sized pieces. It's not like 2 half falafels are normally more than a full falafel. No, 4,000 plus 7. Someone says, okay, I could start with 9 in total, means membership plus 4 for the first deal. Yeah, 9. And then later on decide, you know something, I want someone to run it. You can even break down the 7. I just need someone to run the paperwork. Oh, that's only 3. You want a broker on top of the person running it? That's the other, that brings you to 7. So the product today is you are in control. If I want to do it myself, pay a membership and get all the introductions and emails and information I need to do it myself, or do I actually want a broker to help me and pay that? So, but I realized
a human, right?
The same broker. It's myself, the same Michael Wan who ran on my book when I was previous is running the same book here, and it's the whole team. We call them here instead of brokers because we're moving to a tech company called funding coordinators. So as long as you get used to the word funding coordinator means broker, today for $11,000, you will have a broker run your deal from A to Z and everything in between. There is no difference. And that's the part. When people came out, I used to ask, but I get calls and I said, what do you think we do? I don't know, some technology, you'll shop my deal. Who's going to close if there's an issue? We're doing a deal now, a $20 million deal. This guy calls us up. It's a $20 million deal. Since that point, it was his 3rd deal with us. He calls on the $20 million. He goes, listen, $20 million deal, $5 grand is not called money. $9 grand, it's not called money. He says, how does the whole thing work? He's already using a top-tier real estate mortgage broker in America. I said, the first thing I want to give you one piece of advice. Don't tell that broker that you're using us or anybody else. Because then all of a sudden they're going to change the pricing because they have competition. Keep it quiet. This person went out, put the deal together. We found out which lenders we shouldn't go to, shopped the deal. We bought the person a deal, like 20 basis points a year, meaning over a 10-year term, we would have saved 2 points, 400,000 would have saved. Now, obviously, once that broker found out, they matched it, they figured out, oh, they make a whole story up. But at the end of the day, it started. So the person paid the fee. And the person calls me back up and says, what's your plan? Now that you have the term sheet, you met the banker. What's the story? He goes, because I'm taking this offer, obviously. But I'm thinking about bringing this deal back to my broker to run it for a way discounted fee. Because don't worry, I made my money back because I took your fee and my discount now is way lower because I'm using your term sheet, it's lower. I said, why? Like, I don't really care. Like, my difference would be I make another 11,000. Like, I don't really care. I'm here to trust the advisor. It's not changing, moving the needle. You're my member. My job is to help you. What do you want? So he tells me, what if something goes wrong on a deal? Who's going to help me? I said, if something goes wrong on the deal, it's another 7,000 would have been, I'm sorry, not 11 more. So if something would have gone wrong on the deal, I said, first of all, who's to say that if something goes wrong, it's salvageable? Why are you assuming that someone could save it? Today's day and age, if something goes wrong, the odds are no one could save it. And it was, but I want someone to fight with me. Okay, engage me then. Because really, you'll get involved? I said, yeah, that's what I'm here for. I stand behind the product personally. There's an issue that a funding coordinator can't resolve, I will get on the phone with the lender to try to resolve it the same exact way. And let me tell you something, I have what to lose. It's not just one fee from my end of it. It's the success of the whole company. Because if you have a problem and I solve it, you can put some post on LinkedIn and you say, let me tell you what happened. $20 million deal. I ran into a problem and Ira called and we saved the day. And I didn't have to pay him anything above the agreed upon fee. How many more members are signing up the next morning? That's my business plan. So you just saved me $100,000 of advertising. You got the same equivalent by you giving me that quote. And at the end of the day, he says, you know something? I'm going to start the process. And really, so far it's clean. We're too early to have, our first closing is next week. So you have tons of deals in their application, but the first actual closing from the deal we started is next week. We have repeat business already, even while things are in process. Thank God.
So first of all, it sounds great. It sounds that you guys are literally moving ahead, and that's amazing. But obviously the vision behind it is the tech part, obviously, meaning is the tech. Obviously it's going to be like you said, a combination of human beings and the tech. So now let's talk tech a little bit and what makes PropTech so exciting. That's why I got excited. You know, a classic real estate guy all of a sudden went to the first PropTech convention. I went like in 2018, 2017, I can't remember when it was. But anyways, I went and I got excited about the whole idea. And the more and more I learned, I understood that the whole, I would say, winning milkshake, the winning cholent, the winning formula is by APIs, which is, for those who don't understand, APIs is the integration between different technologies and the ability to do that. So when I talk about GPARENCY, I'm assuming the APIs, the API platform is going to consist that when they go on your system, they're going to be able to see all those integrations from your partnerships, from the lenders, and from others, that they'll be able to obviously load documents, do it seamlessly, and do it in the way that will get them to where they need to in order to get the right financing, etc. So if you could tell us a little bit about forming those. Obviously, you guys are still in the process of developing that, but if you could tell us a little bit about the process that you guys are going through in order to get those partnerships, get those lenders, and form those APIs, which are the integrations for those who don't understand, within your system. And GPARENCY will be sort of the dashboard of all those options. If you could tell us about that process.
Okay. So now we're going from today to over 3 years, for a span of over 3 years. The thing that I had to be most cognizant about is that today we're living in an environment, the commercial real estate space, where most people aren't fully ready for the full technology moving in that direction. And as such, that's why we started with human first. They'll use the technology behind the scenes, and we're setting it up in a way that you'll never have to deal with the technology if you don't want. That's what we're setting up over the course of time. So my co-founder is from Freddie Mac. He's in charge of the product. What's going to be on this technology, software, whatever you're calling it, what's going to be the product? The under the hood is my partner's coming on board in a month from now, coming on board as a CTO, worked at some major banks, did a fellowship at the Marines, and is coming on board to run all technology. The starting point of our technology is going to really be the client-facing information that the funding coordinators see behind the scenes. So think about it like Zillow for commercial real estate. So you'll have a map view of what's going on. Over the course of time, we're not looking to develop any technology that exists in the space. You have to realize we're not competing with anybody. We're not like, oh, you do underwriting, we're also doing underwriting. We're going to find the best technology for underwriting, let the world know all the options, but work with one of them that scans someone's rental and can upload the rental. We're going to go ahead and build our goals with the lending side. We're touching areas that people don't spend money on technology yet. Almost no commercial lender has a platform for them to keep track of what rates they're offering. There's no system for them. They're really be taking our system, whatever we're using, and they want parts of it to them. So most of the APIs you're discussing is really going to be that when a person finishes underwriting a deal and decides they're buying a deal, and then they're going to go use a software that's going to help them raise equity, we're really going to be connecting building out APIs. That's the intended plan from us into that system. You have to realize the whole universe of commercial real estate owners, they start from the second mile. They have a software, they have a program for the management, they have a program for their videos, they have a program to do the energy management of the temperatures. They have to raising equity, servicing the investors. and a whole slew of different services with the first step. So really, we're just another step not connecting, but our goal is to just build those APIs. So whatever data we have by us, they can move in. Most of our data we're going to do in standardization is going to be, and many owners call us up for this when we started, some of the traction, some of the owners, and why the fellow from Freddie Mac came and why his boss pushed him to take the job, is there's no standardization on the loan docs. It's the other side of the equation. Why is it that there's 3,000 lenders and 2,900 different loan applications? I'm using an extreme example there. It shouldn't be that way. Now, the reality is it's not for a reason. It's because each lender is just the way we do it, and who's motivated to change it. Why are there different loan docs? Why on a buy-sell is the different contracts? Why can't you take the 100 shrewdest buyers and sellers that sometimes on the buy side, sometimes on the sell side, get into a room, agree with the set of standard loan docs should look like, and all the variations called modifications create the standard language within a variation. So if this building has rent stabilization, a certain clause you have to put in, let's agree this is the language of the clause. So the starting point is much further. That's the parts we're tackling. Where I want to tackle are the parts that taking the human side and moving it into the technology side. So that this way the industry starts getting standardized. So the API, if you can notice, everything we're doing is like right now, this whole area has been done totally opaque through humans only with no technology. Many don't have CRMs. What's the most amazing thing is we were number 3 in America in transactions. We were number 1 in knowing the data on lending quotes. Because every other mortgage firm in America, it's a general practitioners. That means, Yishai's, let's say you are a mortgage broker. You have your team. You keep tracking quotes of your own team. The next team, their team. There's no centralized keeping track. At Eastern Union, we instituted that there's a central back office that sets up every deal and tracks the quotes. So every quote, we might be 3rd most active, and there's still 2 better than us, but the edge we had is that we're the only one, everyone uses the same one system. That's really where the APIs and the technology is going to go to. So for us, it's the ease of use to get started. Think about like a Zillow. It's not really it's a Zillow. It's just, people have to have a starting point. There's a map. Think about a map in the United States. Think about public available data in a form. We have a map now, and Eastern Union had on their app, they had a map. Taking it to the level where it's seamless and clean. You could see a view of the United States, deals you own, pinned out, deals you once looked at and notes on, deals that are for sale right now, and setting up those notifications. But it's not, we're not competing. So, oh, you're competing with LoopNet? No, I'm not competing with LoopNet, not competing with sales brokers, not competing with anyone in that space. It's that we're going to tell our members, oh, LoopNet is listing a property right now that's next door to you. You might want to go to LoopNet and check it out. We're not having anything more than just the address and where the source is. Oh, there's a broker, Marcus and Millichap. We can become best friends to the brokers at Marcus and Millichap. Because when you're a broker, a listing broker, and when I use the word broker, I don't mean mortgage broker, listing broker. You're a listing broker. When someone finds the buyer, you have to split the commission with them or pay for advertising. I'm coming out, GPARENCY, saying, hey, we're representing X number of borrowers, X number of GPs. You have any properties you think are good for them? We'll sell it to them for free. No commission, no upsell, nothing. And I'm going to charge you. And I'm in charging.
That's a game changer.
So this is the first mile. So we're going to figure out this area just with one goal: sign up more. Think about Netflix. Netflix has a choice to buy the Batman series. They say if they paid $100 million for it, they'll get how many more members? That's how we're thinking. What do the members want? Rental comps? Can we buy rental comps for a certain amount of money from a certain data provider or for now platform, and then sell $1.5 million worth of memberships? That's our whole business plan.
I'll tell you something. It's really, really exciting, but we got to the tough question corner. So here's the tough question. As revolutionary as it is, exciting as it is, and obviously the world is changing, and you guys are getting it, meaning you're coming on time, and GPARENCY is really revolutionizing things. But you guys are not the only ones. Okay, there are competitors, which is a good thing for a tech company.
Very important. Very important.
It's a great thing because it shows that you got something. You're not like I'm inventing something nobody wants.
You need a market. You need a market.
The question is, how are you guys different? What differentiates GPARENCY from the competitors that are also coming up with fantastic technology ideas in order to come and do this market?
So the main differences, and like I said it before, when I use the word I have no competition, for the main product of membership that I'm providing the first mile of information you can do it yourself. All the other platforms that exist are basically the same mortgage broker and saying is we could do that all digitally. So the same exact service mortgage broker. They're charging the same fee structure. They might give a half a point. They might give a flat fee, but they're charging as regular brokers, and then they're using mortgage brokerage services. There's no difference. They're regular mortgage brokers. Some of them even cross the lines to say we're really lenders, and we'll also act as mortgage brokers. Same idea as it works now. You have lenders and brokers do both. I'm coming to the table as a membership. I'm a marketplace. In my marketplace, the same people, someone could come even before they go to the other tech companies. Come here, you're a member. Type in multifamily Texas if you're on the platform, if you're a member, and type in nuanced details. Upload your deal. We'll send it out to those lenders for you. All the services of information and doing the deal, but also giving you information on all resources. We plan on having a resource guide to everything you can need breaking into real estate. So think about Amazon Prime. Think about someone who has the black card, the benefits they have. There's going to be unlimited benefits. You might only care about 2 of the services. Someone else, there's someone who calls, I don't want anything else, 16,000 plus 11 each additional deal. That's all I care. I don't know about anything. Who's my broker? I said, it's funding. Who's my funding coordinator? And I'm good to go. I don't want anything else. Other people, no, I want to one day do it myself. All the other competitors are competing with the old school brokerage model to do it faster, simpler, cleaner. That's just one component if someone wants the brokerage services. There's the thought process we have is that maybe even at that point when you want the brokerage services, maybe use other technologies potentially if you want. My whole thing is the first mile. Only use any broker, whether it's our service or a competitor. Who says you need it? As time goes on, banks are building platforms. What do you need it for? The lenders prefer to deal with you direct. So therefore, that's why I say I'm charging a membership. I'm a marketplace. And on the marketplace, be vendors, be GPs, lenders, all parties for the goal of my GPs.
I love it because you came from the point of saying it's not only tech is one thing, but there's a philosophy. And I'm going to change the philosophy of the market. And I love that aspect.
That's gonna be a membership philosophy. You pay, get what you want. So people ask me, what resources am I putting on the platform? We have a whole list of ideas. The first 100 GPs will tell us what they want more of.
Right.
And as long as their ideas are on target, they're happier and they renew. And we go from 100 to 120, 130, 140, then we go down that path. If they give us wrong information, we're not really growing, we'll have to take ideas we think the market wants to get more. That's what we're going to grow. We're not growing based on what Ira Zlotowitz thinks anymore. This was my vision to get off the ground. I'm going to be able to assess based on the feedback, what's the next move based on all the feedback I see the market having.
I love it. Tell me something. There's as we call it, the word on the market says that you guys came out with GPARENCY, raised a certain amount of capital that is pretty tremendous. Okay. I can't remember the exact amount, but is by far more than the typical startup. A lot of startups are coming up with a $50,000 or $100,000 from a family member, and then they go to a pre-seed round of roughly a few hundreds of thousands. Then it goes to a seed round of a few millions, let's say 2-3 million max, and then they go beyond it. And you guys came up and you said, I want to raise a lot more, and I want to come up strong in the market so I can actually have a head start. Can you talk about that a little bit?
So it's partially true. The end result is true, but how we got there is not exactly that order. My intended plan has always been that Eastern Union will be playing both sides, meaning building technology while acting as regular mortgage brokerage. And the minute the market is going to call for a change, we'll flip the switch in one area and go full force. We never intended to raise seed money. We wanted to self-fund the whole thing. What happened is that this venture capital called us up at left field and said, I heard you're the leader in your space, and let's talk. Originally, they were going to do an investment in Eastern and fund it. Then they came back, said, I did a lot of research on all your ideas, all the years, started a lot of different initiatives, ideas. Some worked, some didn't work. Net, they worked because they were marketing tools for Eastern, but we realized the reason why our research didn't work is because you're never all in. You're always wearing 2 hats. You can't build Netflix while you're at Blockbuster. The only way we're going to see this is if you're willing to leave Eastern, open up GPARENCY, and focus on this company only. Don't wake up in the morning thinking old school. Only think how you're going to grow this business. So in that conversation, it was clear that they said, how long do you think? I said, it'll take 3 years and $39 million if you want to do it right. If I can't leverage off of Eastern Union's brand while I'm doing it, I have to build it from scratch, then it's a longer period of time. And so, if that's the case, you have to go for a larger amount of money. 15 million will be year 1 and 12 million each of the second 2 years. I said, okay, fine. If that was the case, let's go for it. So they offered, as I was doing my due diligence, I started meeting. I realized, hey, we don't need even 15, maybe 12 or 10. Because why would I only give away so much equity in the beginning? I'd rather like each round raise money for higher valuation. It's also part of I never did a VC deal before this. I learned a lot about, I learned the whole business. But say, no, Ira, it's a tech company, it's this, you don't understand that. Okay, I made a decision, I'm following by the book. So I'm following by the book. Like I'm looking to hire a CFO right now. Really, I can't call him a CFO or her a CFO. I'm calling him a controller, head of finance. Because I'm told that when you're ready to go public, you need a certain caliber CFO. So I'm looking for someone that doesn't need the title CFO, but will operate as the CFO.
Right.
Following by the book how things are supposed to take place and supposed to happen. And because of that, we raise this money. Where one of the added perks I didn't realize at the time is that we ended up getting there's details of it, but this other fine print that's not relevant to the concept is we raised at a 60 million pre-money valuation. It's also from the largest valuations. That means gave us 15 million raise, gives us 75 million post-money valuation, 75 million shares at $1 a share. If everyone intended, the shares are going to be worth $100 one day. That was the view everyone went into it. If we had 100,000 members at a 20 to 30x multiple in marketplace, tech marketplace, we get that kind of valuation. 10 billion exit. We came up with 70 million, 10% we put aside to give stock options. Now, I never realized how many shares 7.5 million is. And every single employee gets shares in the company. There's a formula. You get your salary.
That's right.
Your benefits, and they get everyone. So it's a certain percent of shares in the company.
There's some equity, yeah.
And so that mindset, and also when it came to hiring certain high C-suite tickets, the sign on they're willing to take much less pay for a better structure and structure. These things I never had it that everyone in the company believed in Triple Crown, believed in the vision, the best company to work for. That's my goal. Number one company to work for. Calm, relaxed environment always. Because it's not as stressful as the mortgage business the same way. And everyone's wrong in the same way. And then at the bottom, everyone's a partner. You put those three things together. We have one of the core values in the company is speak your mind. If you don't speak your mind, you're not going to work out. And having everyone speak their mind and share their information and push back. And happy to say like not a single decision has been made unilaterally. It's all been made by whatever team is in charge of that project, that decision. So that's what this thing came up from. Beautiful.
The revolution of the financing industry is right here, and I love that. And for those who are maybe joined us in the middle and not in the beginning, this is obviously a production of the CRE SharkEye Show together with GPARENCY Mutual Production. And before we said our goodbyes, Ira, if you could tell everybody how they can find you guys, all those GPs that want to get on this exciting journey.
So GPARENCY.com, very simple. GPARENCY.com. And I give out my information is always going to be public. We take pride in standing behind the product. You can reach out to me directly. My email is iraz@gparency.com. And my cell phone, 917-597-2197. Best is WhatsApp, LinkedIn, and email. I respond to every message before I call it a day. And I appreciate the opportunity for having me. And God willing, the ratio of growth continues without stopping. And I really appreciate this time. Thank you.
Yeah, that's great. And you guys can see obviously the links below above and can contact Ira and GPARENCY and can get on this trip of this journey. And that was one exciting thing, especially when it comes to prop tech. You see and you hear about a company that is coming up to revolutionize the whole market. Ira, thank you so much.
Thank you.
My pleasure. You guys all.